All right. So today we have our very own Henry DeCherney, who's going to share some of his experience in the past of working in the property management business to help us understand and just kind of learn a little bit more about condo resale search. Henry, take it away.
Thank you, Jason. Yeah, and like Jason said, I just want to start off saying I'm not a lawyer or a accountant. A lot of this stuff has a lot of kind of legal and financial implications. What I'm drawing on is my experience of having worked in HOA management, creating resale certificates for about a year and a half. So in that position, I actually compiled all of the documents for all of our associations. So I created roughly 30 to 40 resale certificates that the property manager would then complete or ask me to complete on behalf of him for a sale of condominium. So if you're unaware, every time a unit gets sold in a condo association, they have to get what's called a resale certificate, and it goes over basically the financial health of the association as well as the unit and all of the legal documents that behind the association. So there's a lot of stuff packed into the addenda of a resale certificate, and it can get kind of overwhelming if you don't know exactly what you're looking for. So my intent here today is just kind of give a general overview of condos for those of you that are unaware of kind of some specifics that you should look out for, and how to read a resale certificate, as well as the reserve study, because I think that if you are looking at condos with your buyers, those are the two most important documents that can give you an understanding of if this is an association that would be a good investment, or if it would be worth your buyers looking into. So all right. So we'll start off with just what is a condominium, because it's kind of a general term. Basically, it is anything. It can include planned unit developments, homeowners associations, and then things that are strictly condominiums. So you'll see HOAs kind of, or condos as a general term for a lot of different things. For this intent, the reserve study and things that you'll have to look pretty closely into would be associations that set aside reserves for repairs. So typically those are strictly condominiums, HOAs. Sometimes planned unit developments have them in there, but a lot of times it's kind of just a very minimal. You're paying $45 a month for maybe some utility garbage pickup, but mostly just common area maintenance. And so what makes a condominium is it has to have a document called an article of incorporation, where it incorporates the condominium with the state. With that, there's a declaration and amendments that just go over the kind of general rules of the association and the structure of it. And then those are further outlined in the bylaws. So those three documents are all recorded with the state when the condo is formed, and they kind of give the legal and financial background and structure for which the condo has to operate. So those are all recorded documents, and they are declaration and bylaws are recorded and legally binding documents. You also see rules and regulations. Sometimes they're called CC&Rs. That's another very vague and general term. Rules are not legally binding. However, typically they are in the bylaws. The board is given the authority to create rules, if that makes sense. So the declaration and bylaws are a little bit broader and say things like the board shall have the authority to establish rules on like pets or something like that. And then the rules and regulations will actually kind of have the specifics about what pets are allowed or not allowed. So some of the benefits of owning a condominium, especially here in Seattle, it's a lot more affordable. It's definitely the most affordable option if you're trying to live as close as possible to the city. If I like, you can't even find a single family home in downtown Seattle. So There's typically a lot less maintenance associated with it because even at the kind of PUD, HOA community level, you will have some sort of general common area maintenance, landscaping, usually some snow removal up here. That's kind of at the very minimum. So that is very advantageous to kind of people who are trying to downsize, like elderly people, empty nesters. Getting elderly, don't want to take care of the lawn anymore or have to deal with any of that. So less maintenance can be better. It also can be better for first-time homebuyers who don't necessarily have the time or know how to do all the things that are required to upkeep and maintain the home. They can potentially be a good investment for rentals or potentially a good investment. However, you do have to be pretty particular about the association, and I would say it requires a little bit more research to kind of make sure that it is a solid investment. Like I said, it's a good option for empty nesters that are trying to downsize. My parents are currently looking to downsize. They're looking at condos or some sort of HOA because they don't want to do any yard work anymore, which I totally understand. And they've also lived in Alaska for the last 30 years.
Yeah, they plug into the HDMI. Okay.
Sorry about that. And then also for development purposes, it can be cheaper. That's why you'll see a lot of these kind of like maybe 2 or 3 unit things that ostensibly look like they're 2 separate single family homes, but they are listed as condominiums. They have maybe a minimal $45 HOA that's probably for utilities. The reason for this is they, from what I'm told, only need 1 utility connection rather than multiple, so it makes it a lot cheaper to develop. So there's definitely some downsides of living in condominium. HOAs and boards can be very restrictive, and also the extent to which the rules are enforced also heavily depends on the makeup of the board, which boards are generally elected in cycles of 2 to 3 years, typically not more than 5. So that could mean like every 2 years, you could go from somebody who radically enforces rules to radically does not enforce rules. So there's good and bad things that can come with having a board. It is also, if you're in a typical condominium like building, it is very similar to apartment like living, being that you have people above and below you, typically on both sides. So people who are trying to stop renting and get away from that kind of feel, this might not be the best for them. However, there's other structures of condominiums, PUDs, HOAs, but laundry is also a huge one for condominiums. There's a lot of older buildings in the city that have been converted into condominiums. These older buildings don't have the plumbing infrastructure to handle laundry units in every single unit. So a lot of them will just have shared laundry. If you're like me and you purchase a place and you would have to use quarters for laundry still, that would drive me bananas. So there's a lot of people who are they don't want to look at condos because they don't want to continue sharing laundry. And then it's also pretty hard to put laundry units inside a unit. Typically the ones that are already installed have been grandfathered in. There is a lot of liability with having a unit or laundry in your unit. If it floods, you're not only liable for the damage to your unit, but any common areas or any other units that water damage potentially there's potential water damage. So there are situations. I actually have a friend, their laundry unit leaked into the unit below them and into a common area. And now they owe the association somewhere around 60 grand for all the different repairs that needed to happen because of that. Again, there's some other liability things that can come about that are of no action of yours. I had an instance where an owner was trying to refinance their unit, and because one other owner in the association, it was a kind of a smaller association, one other owner was so delinquent on their dues, the bank considered it a liability and wouldn't refinance the unit. So there's not a lot you can do about that, other than doing your due diligence beforehand and making sure that the association is strong, the board is managed well, and it seems like there's active participants in the community. So resale certificate, like I said, it's created every time there is a purchase and sale of a unit, and it is meant to kind of convey the health of the financials, as well as the structure of the building, as well as the unit. It is a legal document. It has legal documents attached to it. In the addenda, it includes the declaration, bylaws, article of incorporation, among a bunch of other things, including financial documents, budget, and periodical financials. I'm kind of just touching on the most important things that you'll see in these. There's also minutes from the last 2 years are typically included in that as well too. And they are required by law. There are standards set by the state that have to be conveyed with every resale certificate. Typically, they are, or the state also sets the cost for it at $275. So you need to be aware that the seller will have to pay for the resale certificate, and it typically takes about 10 days, or the association has 10 days to produce it. You can get these rushed if you need to, but from my experience, it costs it can almost double the cost if you need to get a resale certificate in like 2 days. So be very cognizant of when you need this, and make sure you order everything beforehand and check up with management. This is kind of a general rule for everything with condos, because I think there's some other moving parts. Checking in with escrow for HOA demand statements is also a good idea. So the NLS Form 27 is actually a resale certificate. You will see the Form 27 plus addenda, and that together is the resale package. There are some management companies that produce their own resale certificates, so they will not look like the Form 27. You will then have to extrapolate all the information from their resale certificate and put it into the Form 27. So reserve study is a very important document that is included with the resale certificate. So it's a report created by an engineering firm and also a CPA. The engineering firm will do what's called a site visit. Well, they will go out to the building and do an engineering inspection of all the different components of the building and create a report of the useful life of the components and the remaining life of those. And it's a pretty exhaustive list. So it'll go through everything from paint, doors, elevator, siding, roofing, paving, asphalt paving for the parking lot. So it is, I think it's an exhaustive list of everything in the association that could or might need to be replaced. And then the cost associated with that as well. Then a CPA will take that and look at the budget for the association and create a report that is, they have a set amount of reserves that they need to meet in order to be able to pay for all these projects. So in order to meet those reserves, they need to have at least baseline funding or ideally fully funded. I will say that I have seen maybe 1 or 2 associations in my time that, as both an agent and as a working in management, that were completely fully funded. The majority that I see are typically in the like 5 to 30% range. So, and most of them are barely meeting the baseline reserves. It is also not 100% required, I don't believe, for the association to have a reserve study. It is highly recommended, and most lenders, I believe lenders and insurance companies require it, but some associations just don't. And that's, again, one downside is a lot of these decisions are made by the board, and if the board doesn't want to do it, the association just doesn't do it. So I will actually, let's take a step back here, because I wanted to actually just show you what the Form 27 looks like. And if you are reading this, what things you should kind of look out for. So it's basically a summary page that has most of the information you'll need to make a pretty good judgment about whether or not it's a good investment. First off, assessment, monthly common expense. The average dues, a lot of people ask this for Seattle, I would say is between 500 and 900. Once you get outside of the metropolitan area, that goes down pretty significantly. I would say for condos, probably 200 to 300 that have that, are requiring reserves for repairs. Then there's also a section if there's any special assessments. This can be tricky though, because they might not have, the board has to vote, the board and the association have to vote on a special assessment. They might be talking about a special assessment, they might be planning to vote on one, but unless there is actually a special assessment in place, they don't have to mark anything in this area. Delinquent assessments receivable. That's what I was talking about with the owner that tried to refinance, where there was another owner that was so delinquent that they couldn't refinance. There's a threshold that most lenders have of the ratio of delinquent assessments to monthly income. I don't know what that is. Typically, it varies from lender to lender, but yeah, that's something that you would need to check with the lender for. Fees, this will just go over general fees with the association. Those are usually pretty straightforward. The things that you will most likely always see is a move in, move out fee and a new owner occupancy fee from the management company. Anticipated repairs or replacement costs, that is, I mean, you could sometimes they'll have an idea, but most of the time it's a good idea to look at the reserve report study, because that will give you a much better understanding of what is actually coming up. Judgments, pending or current, any lawsuits, lenders and insurance companies are very wary of people who have gotten into a lot of judgments or lawsuits. One of the major kind of lawsuits you'll see with condos is associations that are suing builders or developers because they some of the components have failed and it's past the warranty. I think they are in the process of giving the developers and builders a little bit more protection, because they were starting to not want to develop as many condos because so many people were getting litigious after these warranties expired. Another one is insurance claims sometimes will show up on here. That usually insurance claims means something major happened, so it's good to look into that as well too. Declarant units and occupancy, this is a major one. You want to make sure that there's a relatively low number of rental units. The lenders want a low number and the insurance companies want a low number of rentals. The reason for this pretty much being that the more people that you have living on the property that are actually owners, it's thought that there's a more kind of invested ownership of that. People who live in the building are more likely to be active in the board, are more likely to care about what's going on in the building. People who are renters are typically, renters cannot act on or serve on the board and typically do not care about the building as much. Another one you want to look out for is if a person or entity owns more than 10% of the total units. That can make it what's called a non-conforming condo. Lenders and insurance companies, again, very aware of these for good reason. What I've seen is it was an association of 5 people. One owner owned, I believe, 3 units in the building, either 2 or 3. And they passed away and nobody kind of knew, and they weren't paying their dues. And it became a pretty significant problem because the majority of the income for an association is monthly dues. So if all of a sudden, even if 10% of the dues are just not coming in or more than that, that becomes a significant problem for the operation of the association. Financing approval. So you'll see that sometimes a lot of condos are not FHA or VA approved. That's one thing you have to look out for. Definitely check with your lender. They can usually, most lenders have a database of approved condominiums. So typically if you can give them the association name, they can run it and check that. There are also websites. They're specific for both the VA and the FHA, where you can check to see if an association is approved. That one is a little bit spotty though, because I've had times where it says it's approved by the VA, and then I'll talk to the lender and it won't be approved by them. So that's one where you got to kind of double check with the lender. And then down here, exhibits. So this is what I was talking about with the addenda. So this is all the addenda that's included: declarations, amendments, recorded legal documents, bylaws, amendments, and recorded documents, rules and regulations. Those are recorded but not legal. Annual financial statement of the association. So your financials from the previous year and this year. And then periodical financials, which is this month's expenses, and then last month's expenses. And then current operating budget. Every association has to vote on a budget every single year, so that has to be included. And association current reserve study. So you see, there's an option that says this association does not have a current reserve study. The lack of a current reserve study poses certain risk to you, the purchaser. Insufficient reserves may, under circumstances, require you to pay on demand as a special assessment. Yes, that's why it is a major red flag if they don't have a current reserve study, or one that's from within the last 2 or 3 years. One of the things with reserve studies is that they are, because they're dealing with financials and those change, they will be created on a certain date and typically be good for a year. And then after that, they will do what's called a no site visit, where they just check in with the association and just make sure that they're on their plan for funding. So this is the general summary page for a reserve study. I've redacted the information of the association, but you can kind of see what the information they have on here. And it's kind of a lot, but I've pulled out the things that you need to look for. Projected reserve balance, that's what they're currently at. Currently monthly reserve fund contribution, that's the current monthly that they're contributing to the reserves. And then baseline funding, monthly reserve contribution, 19,000. So you can already see that they are not fully, they're not even meeting baseline funding according to this report. So that's a pretty big red flag. So this is a really huge part of the reserve study. This shows all the components, the cost of replacement, the useful life, and then the remaining life. So I basically go through here and look at the remaining life and try to pull anything mostly from 0 to 5 years of remaining life, but 10 years is about the life of when somebody's going to be in the condo, and look to see if there's anything basically between like above $100,000. So there's a couple major ones down here that I saw. They're going to have to replace the roof. Usually the most expensive things are roof, siding, and elevator. So you can see roof is $360,000, siding is 1.5 million. Where was the elevator modernization? 150,000. Elevator things can get pretty expensive pretty fast as well too. Once they get into the elevator, if it's an older system, there might be a lot more things they need to update than they anticipated. And again, these are all estimations. Typically, they try to bake inflation into that. However, I think they were going off of 2% inflation, 2 or 3% maybe, which, if you're following the news, is not exactly inflation rate. 3. Okay, so that's a little bit better, but that's not even where we're at right now. So these numbers could get bigger. Yeah. So then they also have recommendations for baseline funding, and they'll show each year how much the balance of the reserve would be for baseline funding, what their reserve contribution would look like, if there would be any special assessments, and then what the reserve expenses would be. So this is a pretty good one to check to see like where the major years of expenditures would be. Reserve expenses, you can see 2028, they're estimating about $2 million they're going to have to spend. So this will give you a good idea of all the upcoming repairs. And even if they haven't been talking about a special assessment, you can look at this list and be like, okay, they might not need a special assessment right now, but they've only got 200 grand in their reserves. They're only contributing 10 grand a month, and they're supposed to have 360 grand here in a couple of years, along with everything else that has 0 to 5 useful remaining life left. So little bit of quick addition, you can say that that's probably not going to work out. So let's go back to there. So yeah, just cross-reference between fully funded baseline reserve recommendations. Just check to make sure off of the budget, there's a line item that says reserve contributions. Make sure that's at or above the baseline reserve, and you should be good. So they also have special assessment recommendations. If your board is doing their job, you should not have to have a special assessment. Special is in the name. If the board is doing their due diligence and following these reserve studies and then doing voting appropriately, they will be increasing dues in order to fund the reserves to the requirements of baseline funding. That being said, not a lot of people like their dues being raised. So the association as a whole, I believe, has to, as a supermajority, vote to raise the dues. It does require a majority vote of some sort. So it is a process to get the dues raised, and there typically is resistance. But the flip side of that is you either pay a little bit more every month, or you're going to pay a huge lump sum down the road. So just some general things to know about condos. Typically, none of them allow short-term rentals. That would be like your Airbnbs, that kind of thing. In my time, I know that there's maybe 7 in Seattle that have it written into their declaration that they allow short-term rentals of under 30 days. The majority in their declaration typically outlaw any rentals. Transient housing is what they call it, but it's typically defined as anything below 30 days. Sometimes as anything below 6 months. That being said, I have also seen some associations that don't really have any rules beyond that, and people have used or have rented out their units as Airbnbs, but only for month stays and above. So there are some ways around it. You might have to pay a move-in, move-out fee every time you have a new renter, though. So you'll see a lot of times what's called a rental cap. Like I said before, investors and insurance companies, or lenders and insurance companies, typically like a pretty high rental cap or a low rental cap and low amount of rentals. Rental cap is certain amount of units can be rented in the association. Typically, they do that just so the building doesn't become purely rental. Like I said, there's less control. It's usually less active of a community and association. So there's just better idea overall to have a lower number of rentals. However, if you're an investor and you want to rent, that is kind of frustrating. So if you're working with investors, one of the main things that I will always look out for is just no rental cap. If they're investors, they're typically cash buyers, so they don't have to, they're not beholden to whatever the lender requirements are. So the rental cap is not really an issue. Not having a rental cap is not an issue. So again, lending requirements, they have pretty specific things that they're looking out for. If they're VHA or FHA or VA approved, again, ask your lender. You can sometimes, if they're not approved, get what's called spot approval, where the association has to be approved as a whole. What they'll do is they'll get the unit approved for either FHA or VA. Again, they are a fan of rental caps. They don't like it if there's a lot of rented out units. They don't like if there's any litigation or insurance claims. So dues, like I said, responsible dues will keep their dues in line with what the reserve study recommends, so that there's less of a likelihood of special assessments. However, things can always happen, acts of God. However, you want to make sure that you are working with an active board, because there's a pretty famous incident that happened a couple of years ago in Florida, where a building more or less just fell into the ground, ocean. And because of that, lenders and insurance company have gotten extremely more diligent about making sure that boards are keeping up with what's called deferred maintenance and just doing all the capital projects. So one of the ways that you can check that is basically just looking at the minutes. If there's a lot of minutes, it's indicative of an active board. Sometimes there's boards that only meet once or twice a year. There has to be an annual general meeting. So just looking for more community and board involvement and activity is typically indicative of a better and more healthy association. Again, reality is that most people don't want to raise their dues. Boards are elected in cycles. That means that somebody could come in and have a really good idea and intention, and then 2 years later, when they're voted out, something completely different could take, somebody else could take the presidency and take them in a completely different direction or whatever. So it is good to be active on the board. If you own a condo, you have more of a say. At the very least, show up to meetings if you're a condo owner. But again, the reality of that is I have friends who have been on condo boards, and they can be very excruciating and time consuming, and it's not a paid position. So dues versus special assessment. So technically both are called assessments. Our annual assessment for the unit is the amount that it's charged every year. Typically that's broken up into months. So that is just their regular assessments. Special assessments is anything charged on top of that. So if you're going to list a condo, things I would recommend you do. I know there's a lot of people who don't agree with me on this one, but I would say order the resale certificate before you list. I totally understand if you are not wanting to do that because you have to order it anyways when you're under contract, or it's periodical, so you have to update it in the event that your condo doesn't sell. It does need to be updated every 45 days. That is about the time that condos are sitting on the market right now. So there is a potential that you might have to order it again. And that is an expense the seller can have to accrue, or you could choose to take that on as the agent. I would highly recommend ordering the resale certificate before, because not only does it give you absolutely all the information you need in order to list, it gives the buyers a complete picture. Because my thinking is I would rather have buyers see a resale certificate, see all the information before writing an offer, rather than have buyers come in after we go mutual, see the resale certificate, see a reserve study, and say absolutely not. Then you go out of contract and you have to go back on market. That just doesn't seem worth it to me. Confirm all common and limited common areas and access with the owner. So common areas would be things like the, entryways, laundry rooms, if there's an exercise area or gym or garage. Although limited common areas are the things that the owner owns that are outside their unit. That can be parking spaces or storage units or balconies. So typically if you have like a patio or a balcony on a condo, that area is called a limited common element, where it might be part of the common area, but it is attached to that unit for all sensible purposes. If you're looking for assignment of parking and storage units, typically that is an exhibit at the very end of the declaration. So if your buyer or if your seller doesn't have that information, there are places that you can find that. Also, that with parking spaces and storage units, one thing that can happen over the course of like 30 or 40 years, you'll have people that are living there that have lived there for like 30 or 40 years. People don't use parking spots, so they'll kind of trade. And then you can also, because you technically own it, you can sell your parking space. So I have seen condos listed downtown for $65,000. You're like, that's a steal. And then you look at it, they're selling a parking space in a condo building right downtown for $65,000. So there are also, you know, little agreements, handshake deals where you can use somebody's parking spot, or, you know, you have access to it. So just know that if there is no parking spaces with the unit, there might be a way to get a parking space if you ask other owners in the building. Then of course, confirm the management and the board contacts. Typically the management likes it if the actual owner is the one that requests this resale certificate. However, it's good to establish rapport and connect with the manager. Having a good relationship can make the transaction go that much smoother. Also having board contact can make the transaction go that much smoother. Personally, I highly recommend doing open houses. I know a lot of people don't like doing open houses at condos because there's parking can be an issue, access can be an issue. People are wandering around through an association. It might be a lower price point. One thing that I think you can get out of open houses that you can't with others is typically with access. You know, they have to enter a code in a lockbox. I will just put up a sign, please call this number for access to open house. That way, anybody that comes into the open house is automatically calling you. So you automatically have their phone number. That's an advantage, I think, if, you know, because not everybody wants to sign up. Door knocking, for whatever reason, I think I'm more successful doing door knocking in condos. I think because it's an association, you can get a feel for the kind of people that are there and the community. You'll almost guaranteed if you knock on 10 doors, one person will be that person who will either tell you absolutely everything about everybody in the association, or they will want to bring you into their unit to show you what things they've done or how it's different from the unit that is being listed or you're doing an open for. So a lot of good potential there. Highly recommend it. So that was basically all I had. I wanted to just kind of do a general overview, and then if there's any specific questions, I want to make myself available now.